Welcome to Manifested Publishers. My name is Mr. Mariga. I'll be teaching you advanced management accounting, which is in the advanced level. Today we will talk about a topic known as cost estimation and interpretation. Cost estimation and interpretation, which is a topic closely related to cost estimation and forecasting that was covered in the intermediate level. So what we're doing here today and in this lesson and for this particular topic is simply developing that what we learned in intermediate level under cost estimation and what? Forecasting. Now, cost estimation here simply is the study variables. Dependent variables here are your costs and independent variables, which are what? Your activity level. Your activity level or your output. Okay, then once you have identified how they relate, how the dependent and independent variables relate, or how the cost and your activity relate, the next thing is forecasting, where forecasting or cost forecasting simply it is an attempt to predict future costs, using the cost relationship obtained. Using the cost relationship obtained. So simply it is using this cost estimator equation here or relationship, then you use it to predict a future cost. You use it to predict a future what? Cost. Then interpretation here simply is how you interpret or how you further analyze whether the cost estimator relationship is good or whether it is significant or not significant. We have two main methods of cost estimation. We have two methods. The first method is linear relationships or linear methods. Under linear methods here, we normally assume that cost when plotted or the equation or the cost relationship is linear in nature. So here the assumption is that the cost relationship is linear in nature. Here they are saying the cost relationship linear in what? Nature. When we say it is linear in nature, we basically mean that the equation can be expressed in the form y is equals a plus who? bx. It can be expressed in the form y is equals a plus bx, or your cost is either fixed or variable cost. Your cost is either fixed, which is f, plus a variable cost vq, where y c is your dependent variable. Your what? Your total costs. That is your dependent variable or your total cost. A or f is your fixed cost. Is your slope, or not slope, but the y-intercept, which is y when x is who? 0, which could also be mean that this is your fixed cost. That is your fixed costs. Then B and V is your gradient or your slope, which is your change in y over change in x, meaning it is your variable cost per who? Per unit. B, which is V, this is your slope or what? Gradient. Slope or gradient, which also means that it is your variable cost per unit, which is your variable costs per units. Remember, your variable cost changes with output. It increases with increase in output and decreases with decrease in output. X or Q, X here is your activity level or your independent variable. So this is your independent variable, which is also your activity level, which could also be your output. Then the product of your variable cost per unit and your activity level will give you your total variable what? Cost. Your total variable costs. Alright. So with linear methods, the relationship is in the form y is equals a plus what? Bx, or cost is equals to variable plus to fixed plus variable costs. We have examples of methods of linear. Examples of linear methods. Examples of linear methods of cost estimation. Examples of linear methods of cost estimation. The first method is high-low method. Then we have ordinary least squares method. Ordinary least squares method. The third method is accounts analysis. Accounts analysis method. We also have industrial engineering method. Then lastly is method of scatter graph. Scatter graph method. So let's start with the first method known as the high-low method. So the first method is the high-low method, cost estimation. Now this method known as high-low method requires that as a user of management accounting information, that you form cost estimator equations that are of the form y is equals a plus b q, or bx if you so wish to call that bx, that way, such that this equation here will be of costs. Remember, y is your cost, a is your fixed cost, b is your variable cost per unit, and x or q is your output. X or q is your output or your activity level. So using high-low method, we start by selecting your dependent and independent variables. Dependent and independent variables is y and x, or y and q. And how do we do that? We select the highest value of the independent variable x and the cost incurred. Then you select the lowest value of x and the cost incurred, such that now you will have 2 points. You will have 2 points that you can then use to form an an equation. And I want us to look at a question of December 2024. December 2024, question 1b. And the company name is known as Mario Processing. They're saying, or they are stating, the management of Mario Processing Company Limited wishes to obtain a better cost estimate to evaluate the company's operations more effectively. The following information is provided to you for analysis. You have your year and the month, the equivalent production units in thousands, your overhead shillings in thousands. You have the month is from January all the way to the month of who? December. In the month of January, you're producing 1425, incurring 1285. February, producing 950, incurring 9875. March, 1130, a cost of 10450. April, 1690, a cost of 15280. May, 1006, a cost of 9915. June, 834 is your units. Your cost is 9150. July, 982 units, overhead of 10133 shillings. August, 1259 units, a cost of 11981. September, 1385 units, a cost of 12045. October, 1420 units, a cost of 13180. November, 1125 units, your overhead is 11910. And December, 980 units with an overhead cost of 10431 required. Using the high-low method, formulate the overhead cost function in the form of y is equals a plus b x. Using the high-low method, formulate the overhead cost function in the form of y is equals a plus bx. Let me start by listing down all these costs. We'll have the month, you have your units, there, and you have your overheads. I want to list them down. Why? So that I can show you what is happening clearly. You have the month of January, Feb, March, April, May, June, July, August, September, October, November, and December. Your units is 1425 with a cost of 12185. February, 950 with a cost of 9875. March, 1130 with a cost of 10450. April, 1690 with a cost of 15280. May, 1006, 9915. June, 834, cost of 9150. 982, 10133. August, 1259, 11981. Then September is 1385. Last that is 1205 as your cost. October is 1420. 13180, November 1125, this 11, 910, 980, and lastly 10 431. 10 431. We have listed down all the costs and the units that were produced. Now, after we have listed down that, or using this data now, we need now to form equations of the form y is equals a plus bx. But for us to do that, we need to ask ourselves, what is y and what is x? Y is your cost, or the dependent variable. We say it is dependent because it can only be incurred when you do what? When the independent variable is incurred. So the y, which is the dependent variable, it is dependent on the independent variable. And in this case, y will be your overhead cost. Y will be your overhead cost. So that will give you y. Then that automatically means x is your who? Your output or your units produced. So this is x. There. Your units produced is x. Your units produced is x. Why are we saying that? Because the overhead costs were incurred as a result of the units being done what? Produced. Then what did you do? You select the what? The highest independent variable x and the its cost. You also select the lowest independent variable x and its cost. So from the month of January to the month of December, I can see the highest units produced. The highest units produced, I can see there the month of April, which is 1690 units. And when you produce 1690 units, you did incur an overhead cost of how much? You incurred an overhead cost of 15,280. 15,280. That is from the highest points. Then your lowest units is the month of when? June. You produced 834 units and ended up incurring a cost of how much? 91.50. A cost of 91.50. Once that is done, you have successfully selected the highest and the lowest units and the cost incurred as a result of those highest and lowest units being produced. The next thing we do is we then form two simultaneous equations of the form y is equals a plus what? Bx. But how do we do that? We simply substitute the values of y and x. So we form equations. And the equations, remember, should be of the form y is equals a plus what? Bx. You have your values of y and x. So you simply substitute now and say 15,280 is equals to a. You don't know the value of b, but you know x is 1690. The second one will be 91.50 is equals to a plus 834 of b. 834 of what? B. Okay, that is that. Then what then do we need to do? We then solve for the value of a and b. To solve for the value of a and b, we know b we said is your gradient. So what does it mean? You simply take the change in y over change in what? X. B, chukua change in y over change in what? X. How is that possible? Your y is 15,280 minus 91.50 divided by who? X. 1690 minus 834. So the value of B will be 7.16. 7.1612. Then once that is said and done, what do you then do? You then substitute the value of B in either the first or the second equation, so that you determine the value of A, so that you can use it to determine the value of A. Say 15 to 80 is equals to A plus 1690, but the value of B we've just obtained it as 7.1612. So now A will be 15 to 80 minus, so the value of B should be, of A should be 3177.5467. So your equation that is straight line in nature should be Y is equals to 3177.5467 plus 7.1612 of who? Of X. And that is how you form a cost estimator equation. Using which method? Using high-low method. Using the high-low method. All right. This method has some of the advantages, or some advantages, such that it is very easy to explain to an user. Does not take a lot of time. But one of the main disadvantages of the high-low method is that it only considers two observations, which is the highest and the lowest. All the other observations are ignored. Another disadvantage of this method, you cannot use it when you have more than one what? Dependent or independent variable X. You cannot use it more where you have more than one independent variable X. You can only use it when you have one X. Right. The other disadvantage of this method is that the validity and reliability of this equation cannot be done what? Determined. You cannot interpret and say that this method or this regression equation we formed is accurate or is not accurate, or if it is accurate, to which level is it accurate, and so on and so forth. So those are some of the challenges of the high-low method. And these challenges of high-low method, can be done what? Can be mitigated using the ordinary least squares what? Method. So I want to talk about the second method, the ordinary least squares method.